All right, welcome everyone to today's market recap. There's a lot to review, but first, if you're new to my channel, my name is Jake. I make daily videos on ICT concepts, market recaps, and this is one of the best and fastest ways for you to get better at trading. I'm going to be reviewing all kinds of different trades you could have taken today from all kinds of different people. So it's going to be an unbiased view of the market, lots of different trades you could have taken, and we're going to be reviewing the market in detail. So if you want to study, this is essentially the best way to do it. So let's jump right into the market. Today we had essentially a giant accumulation range that formed for quite a long time from Sunday until right around 8:30 in the morning. And so immediately when you see that, you really need to realize, okay, what is going on? The market has been accumulating all morning. What does that mean? It means we might have an AMD day, right? So we had bearish New York manipulation day. I call these AMD days, where just accumulation, manipulation, distribution. These will be really obvious because they'll look like this, right? You just have AMD. And actually, if I pulled up the 12-hour stat map, it would show that we actually went to that 12-hour manipulation level and then straight to that 12-hour distribution level. It was almost perfect, but unfortunately, I'm recording this a little too late, so I can't show that. If you don't know what stat map is, it's like the it's the statistical expected levels to expect manipulation and distribution. So go watch my video on that if you want to learn more. But anyway, first trade of the day going into the morning that I was the only person that saw. No one else even talked about this on Twitter from what I saw. But I thought this was an amazing trade. So I'm going to discuss it. You had all of this low resistance liquidity, and you had an SMT going into the morning. And then you swept out these lows, and yes, you had these relatively equal lows, but we had a giant SMT here, and we had all this low resistance liquidity. So once you closed above this to me would have been a good trade, especially because you can move your stop loss to break even right away at this high. And so this is a really, really quick and easy trade that if I was on the charts, I probably would have taken this. Entry right here, probably targeting the high of the low resistance liquidity, stop loss if we close back below this old fair value gap. So my stop loss would really be like right here, but my hard stop loss would be a little bit lower. But the idea is once this closes back below, then I would get out. So it would be about a 1-to-1 risk reward trade. And you can see my stop loss to break even would be right away, and it'd be a really quick and easy solid trade. And then the thing about these trades though is you really have to be ready for them. You have to be anticipating your entry, and you have to know how much you're going to be risking right away. So that was a trade that I spotted that I really liked. Unfortunately, I wasn't on the charts early enough, but we're also going to talk about some trades for some other people as well. Now, the trade of the day, in my opinion, and the trade that I would have liked to have taken today, was this amazing. This was the entry for the entire day. It's screaming off the chart. You have this 2-minute inverse fair value gap. I'm pretty sure everyone took this. Like, everyone took this on Twitter. The main reason I didn't take it was because it happened so fast, right? It happened so fast, and I have trouble focusing. Like, I get, like, distracted really easily, so I have trouble focusing. So if I was, like, completely focused, I definitely would have saw this, and I definitely would have taken it. We swept out this high here. We went to that statistical manipulation level I talked about. And then we had equal lows down here. And then as well, you'll note that if I turn on our session highs and lows, we actually went straight down to London's lows. So if you took this trade with London's lows in mind, now I would have taken essentially most off probably at this low or this low, because I am a simple person that likes to just get my money and get out. But if you wanted to leave your let's see, where's short position? If you wanted to leave your runners to London's lows, that would have been a 1.7 to 1, and that would have been really nice. Now you could have even had your stop loss even a little bit lower if you wanted to, because You could have taken it based off of these two 1 minute gaps put together, and then maybe you put your stop loss if we close back above, you know, something in here. So, but in general, your stop loss would be if you close back above this 2 minute fair value gap, this old fair value gap, and you can see you get a quick stop loss to break even, and then I would probably take profit. My take profit would have been probably would take profit at midnight, just because it'd be very close to this drawn liquid, or I'd take profit at that's not that good. I'd probably take profit here for almost a 2-to-1. So really, really great trade. A lot of people took this. You can see this was also taken by Hydra, plus 130 points on the inside the Discord. And yeah, like he's had the same idea as me. Like I would have taken a partial even before these wicks. And so a lot of people took that trade. Very, very cool. And as well, you could have left. If you had conviction in these equal lows or London's lows, you can see this would have been a really, really nice trade, just depending on what you did here. But super, super high conviction play. A lot of people took that. There was also this. Oh, and I will say, this was also on the 5 minute. You can see this was a giant 5 minute inverse fair value gap. So this was a really, really nice setup here. 5 minute IFEG. As well as this 2 minute IFEG. Once again, entry here. Stop loss if we get a close back above this old bearish fair value gap, or this old bullish fair value gap, and then targeting this low. Yeah, nice little 1-to-1, 1.5-to-1. Then let's look at some more trades. So I believe Sotep had a trade. It might be the same exact trade. Yep. He points out that you can see here we got that inversion. We went straight down to London's lows, and I see he has the session highs and lows indicator up now. So that's pretty cool. But yeah, this session highs and lows thing, it's incredible. Use them as your targets, as your draws on liquidity. They are excellent targets, because you have to realize that's where the most of the trading happened. That's where the most liquidity is going to be, underneath the lows and highs of these sessions. So that's where all the exit liquidity is going to be. And so from an institutional point of view, that's where you're going to take profit, right? Anyway, then I didn't see anyone talk about these two trades, but there were a couple other trades before that. There was this. That was a B setup, in my opinion. Maybe A-, but once again, like, I didn't take it because we were pretty high in the range, and we had already hit one of these standard deviations. Yeah, this one. We had already hit this 2 to 2.5 area, and so I didn't have conviction in this. I saw we were delivering from this 3 minute fair value gap. I saw that we were inversing on the 1 minute. I saw we had this low resistance liquidity right here. So I was like, okay, this could work. But I'm not gonna take this one. And this one did end up working. This would have been a nice. Let's see here. Stop loss if we close back below this old bearish fair value gap. This would have been a good trade. This would have been like a 2-to-1. So if you check that, nice job. And then as well, then there was this one, which was like an A setup, or maybe an A-, in my opinion. I don't know what you want to call it, but we swept out this high. We got to close below this on the 3 minute. I thought this was good. I probably would have taken this had I just had my account, my Trade of 8 open. My Trade of 8 wasn't open, so same thing as before. Just kind of like, I know that where the trades happen, but I'm not able to react fast enough. And you can see that right after we inversed this fair value gap, you can see we went straight down and we ran this low. And so this was an excellent trade. Now, definitely would take off all at this low, or even take partials here, because what's down here? You have a giant 15 minute fair value gap. Do you really think you're gonna get through it on that first go? Maybe, but honestly, I'm not betting my money on that. Like, yes, we have equal lows. Yes, we have London's lows, but don't bet your money you're gonna get through a 15-minute fair value gap on that first go. Now on that second go, after we came in, filled this fair value gap, then came back up, okay, now maybe we'll go down to London's lows, and you can see we go right down to London's lows after we had already came down and filled this fair value gap. So it's just kind of context, like understanding like here, okay, this is like an A minus setup because we've only swept liquidity once, but then this, okay, we swept liquidity twice, and now we have a multi-time frame trade. We have a 5-minute inverse fair value gap, and we have a 2-minute inverse fair value gap. So understanding that, and then understanding like we had equal lows, we had London's lows, knowing this is a giant accumulation range, this is where you're going to be able to take profit. And there's a ton of people. There's going to be a ton of people panic selling for a loss down at London's lows, and then boom, right down to London's lows. Very, very fast, very aggressive because people know that's where the sell side liquidity is. That's where people are going to sell for a loss. So, boom. Excellent, excellent. So I think that was 4 trades I covered. There was the first one. I did cover this one, I believe, right? Where we had a close above. I don't know if I covered it. I'm pretty sure I did. Yeah, I did. But anyway, you guys remember this one where you enter on the close above here, targeting the end of this trend line here, and then stop loss if we close back below this old bearish fair value gap. So this one would have been a nice like 1-to-1, but very high conviction. Anyway, then you can see here that a part of why we had a pushback higher was a reaction off of the midnight open. We got a reaction off the midnight open as well. This was a 15-minute order block here. So pair those together, we get a pushback higher and sweep buy side one final time to that statistical manipulation level on the stat map that I talked about, and then a dump. And let's look at some more trades from other people. And those were the main 4 trades that I saw today. But yeah, we're gonna look at other people's stuff, and now we're gonna get into more detail. So if you just want to stick for the main stuff, feel free to exit the video now. But I'm gonna be covering stuff a little bit more in detail for the rest of the video. So anyway, we have some more trades from Dodgy. He shows how, oh, that's not the right thing I wanted to show. This one. We have some more trades from Dodgy here where we get all these different trades. We covered, he didn't even talk about the one that I talked about earlier in the morning, but that one was probably like maybe the best one of the day. Or no, this one was the best one. That one was also really, really good. This one was, he didn't even talk about that one either, but that one was A or A minus. This one would have worked too, but I mean, I feel like you would have to take profit here. Like, I don't know why he's ignoring this fair value gap. I would take profit here, but this one would have been a win. But I just don't think that would have been good risk to reward. I wouldn't have taken that. I would take all off here before this fair value gap. You see, we inverse here, so I would. This one was a good one. This one was a good one. And this one was like a B, and then the other one was an A. I don't know about this one. This one was okay, but we had that fair value gap, and so that's just not great risk reward. And then these 2 losses, I just don't think I would even consider taking, knowing we're bearish daily profile, bearish AMD daily profile, and we have this giant dump. Why are you trying to long out of this dump? That just doesn't make a lot of sense to me. I would not take either of these losses just because of the context of the day. Remember, we talked about this was a bearish manipulation day. Understanding that we had a manipulation into that, we had a manipulation up above that accumulation range, and then we're dumping down. Where does the market want to go? It wants, when you have an AMD day, let's pull up this again here. I don't want to get a copyright strike. That was an accident. Okay. Boom. You can see how when you get this AMD day, it's not just like, oh, we're going to take the bottom of the range. No, usually when you go and get this AMD day, you continue lower the rest of the day. And you can see that's exactly what happened. We get a push down lower, and we actually go take out a key level. I think this is where things get really interesting. Check this out. We take London's lows, and then what's our final target? PM's lows. And check this out. If I measure out standard deviations of our final move, here you get that 2 to 2.5. Here's that 4 to 4.5, marking out this low. And then let's try that. You can see that 2 to 2.5 lines up right around PM's lows, and that's exactly where the market went to. Can I really be making this stuff up? No, I literally didn't even know for sure where these standard deviations were going to go. I had an idea that one of them lined up with PM's lows, but I didn't know which one it was. I had no idea that even measuring this one was going to give you this. So, and as well, this 2 to 2.5 was right around these equal lows. I mean, I really can't make this stuff up, folks. This is crazy stuff. As well, we had a bearish SMT here. So we had a bearish SMT here, and this pushed up into 8:30 open, and I was kind of falling asleep at this point. I get off the charts at 11 anyways, but I was kind of saying, like, I do think we're going to continue lower now since we have this AMD day, and I do think we're going to continue lower. I'm just going to kind of wait for us. I would expect us to push back up into this fair value gap up here and maybe get a push into midnight. Now, we didn't quite get a push into midnight, but we did get SMT here, and then we got a push into 8:30, at which point you had this inverse fair value gap. And I don't even think anyone talked about this. And now normally I would not cover this since this would be a PM trade, but you can see this would have worked out. We had SMT pushed into midnight into this fair value gap here, so we're delivering from a fair value gap, and then you get that inverse, and then the rest is history. You could even target PM's lows, and this would have been an amazing trade. Now I would probably just try to target the end of this trend line, or even take some more off here. Stop loss to break even, obviously, and you can see you wouldn't even get moved to break even. So stop loss to break even here, you wouldn't get moved at break even, or even stop loss to break even here if you wanted to, and you can see you would hit that final TP. And as well, if you left runners to PM's lows, you'd even get that. So this would have even been like a 3.5 to 1 risk reward trade. So this stuff's incredibly powerful. And then as well, I wanted to talk about the new week opening gaps because I think this is really fascinating. Or actually, it was the new day opening gaps, but I will talk about the new week opening gaps as well. So these are hidden barriers within the market, right? They're hidden secret key levels. And so sometimes you'll get a run right through them. Other times you will perfectly respect them. And so you just kind of have to know the context of what's going on. Here you can see we perfectly respect it, and here we run right through it. So it's one of those things where it's like, use it as a confluence. Don't rest everything on a new week opening gap holding, but understand that they will sometimes work as invisible barriers in the market, and sometimes they'll just cut right through. And so anyway, the market was drawing lower to go fill this most recent new day opening gap, and we go fill that bottom of that new day opening gap. And so I'm gonna actually make it only show like the most recent 5 because I think that's kind of overwhelming the chart a little bit. But yeah, you can see the market drew down into here, and if I turn on the new week opening gaps, I'll put this back on 20 just for now. And then if I put the new week opening gaps, same thing. This is a new week opening gap. We go to fill that, and then we push back up and fill it again before continuing lower. So it's really fascinating. And so we got an amazing AMD day. I'm going to talk about more about the AMD day at the end, but I want to just finish going through everyone's trades first. So we had this from Dodgy. I'm not going to play the video because I don't really know what music's going to get me copyrighted or not, but this was a PM trade, and it was an inverse back to the upside in the afternoon. I don't really know why he's anticipating us to break this fair value gap here. Maybe he's just trying to leave runners, just for fun. But I would take all off here. I wouldn't even try. I don't know why he's anticipating us to break it. Just take all off here. That's what I would do. But I guess that's not really great RR, so I don't even know if I would take this trade then. But yeah, you can definitely see that this, with high conviction, once this 3-candle inverse happens, you're going to go run this high. I think he just wanted better risk to reward is what it was. But because you don't get such great risk to reward to this internal high, I don't think it's the best trade ever. So yeah, now that you closed above, now you have even more conviction that we're probably going to go even higher. I guess you have this one as well. So you have to close above this one. And then if you close above that one, and then boom, he enters more because he knows, and he gets stopped out. But once you close above this one, it's higher probability that we're going to go run those next highs. So now I wanted to talk, I guess, not many people are still watching, if anyone, so I could talk about whatever I want now. And I want to talk about Event Horizons because this is crazy. You might be wondering, well, with an AMD day, you need a key level to push into. And so I was like, okay, well, what kind of key level could we have possibly pushed into, right? I checked for order blocks and stuff. Like, I was like, okay, did we push into an order block? Well, there's this. I mean, that kind of got close, but we didn't even really tap into that. There's this, but we didn't really tap into that. You can see what I'm talking about here. You have this. Didn't really tap into that. You had this, but once again, this didn't really perfectly respect it. Even like the midpoint of this order block didn't really work that well. So I'm like, well, what kind of key level could we have pushed into? Did we have like a new day opening gap or something? Like, what kind of key level did we push into? Like, to have this AMD day. And so I was messing around a little bit, and guess what I found? So I was like, okay, there's no new day opening gaps, but this is a giant range. And I'm realizing the best event horizons will be, I mean, I don't know if this is true or not for sure, but what I'm noticing is the best ones. So if you don't know what event horizon is, go watch my video on them. They're basically the midpoint between two opening gaps. And the opening gaps are just the gaps that form between the new day or the new week. And they'll just be like, and they're basically invisible barriers within the market. And so are the midpoints of them, which are called the event horizons. But anyway, now I'm gonna show this, but yeah, you get the idea what event horizons are. Anyway, I'm gonna pull up the event horizons here and check this out. Guess where we pushed into? The event horizons. So what I'm figuring out is I'm starting to realize the best event horizons are when you have a wide gap between opening gaps. These ones work pretty well, actually. So we get a push into that. See how the candle bodies of them, these candle bodies respect the event horizon. We don't get a close above it. We just wick into it 4 times. Orders getting filled here before delivering to London. Lows. And so not every event horizon is going to work perfectly. You can see this is all this is just a random nonsense. None of this holds. But understanding that, like, if you know the context of the day, they can be utilized as an additional key level for smart money to enter. And just understanding the context, like, not all of them are going to hold, but clearly some of them do. This one clearly did. Clearly this new day opening gap held. So to say it's all BS doesn't make sense. I think what the reality is it's more or less just like understanding, like, okay, smart money needs an entry point to go target London's lows. Well, this is a key level, so they could put limit orders here, and they do, right? They do. So just understand the context and knowing not all of those are going to hold, but if you know the context, some of them will hold. Anyway, just want to talk about that. I don't think anyone's really watching anymore, but there's a couple more things I want to talk about. First, Kane talking about, I haven't even looked at this yet, so I don't know what he's talking about, but we're going to try and do some research. That 15-minute inversion on NQ today combined with the standard deviations targets 160 points. Let's see what he's talking about. So someone replies to him here. Is this what he was talking about? I don't even see a 15-minute inversion. But this is kind of crazy because I've been talking about standard deviation targets so much, and here we have Trader Kane talking about standard deviation targets. They are powerful stuff. So if you don't know who Trader Kane is, he is the guy that got that $1.8 million payout. So very, very impressive stuff. I'm wondering, maybe he's talking about, like, okay, what 15-minute inversion could he possibly be talking about? Is it this? That doesn't really make sense. I think he's talking about that one standard deviation. So like if I measured out these, the 2 to 2.5 lining up at PM's lows, I think he's talking about this. And 15-minute inversion on NQ. He might be talking about this, honestly, because what other 15-minute inversion is there, right? So he's just playing super conservative. He just waits until it's like, okay, I know for sure that at this point, once this 15-minute closes, this is AMD. And so he's waiting for this 15-minute inversion before he even enters. It's interesting. I would have entered up there at that inversion personally and then targeted here for a lot better risk reward, but he is essentially the best prop firm trader in the world, so I'm not going to question him. I'm not sure if this is the 15-minute inversion he's talking about or not, but regardless, he does point out how crazy it is that the standard deviations align so well, especially with PM's lows. You can see that if I pull up that, where is it? Oh, shoot, what happened to my indicator for session highs and lows? Okay, I guess I'm copying it over from here. I don't know how it disappeared. Okay. Anyway, turning this on. Right to PM's lows at that 2 to 2.5 standard deviation. So if you're not convinced on standard deviations yet, I don't know how else to convince you. This stuff's just like absolutely insane. And then we're essentially done. I talked about Dodgy's trade. I talked about I'm gonna talk about the engineer here. He says basically what I was talking about earlier. We had that new week opening gap as a draw on liquidity. Is he looking at the S&P? No. But I think he's talking about the new week opening gap being a draw on liquidity, and you can see the market goes to this new week opening gap and it utilizes that as a draw on liquidity. I think that's what he's saying, but you can see here he says gap fill and new week opening gap as draw on liquidity. So the market wanted to draw back to this new week opening gap, and it did. And then there's one more thing I wanted to talk about. Oh, I want to understand this guy's trade. So this is the very end of the video because it's like, at this point, this is just fun, me speculating. But I want to figure out how these quarterly theory guys trade. Because look at this. It really is random, isn't it? So Trader Day, if you don't know who he is, he's the guy who made quarterly theory, which is a super advanced concept. Basically, it splits time into 4 quarters. Either price is consolidating, expanding. It's either accumulating, manipulating, distributing, or having a continuation reversal or reversal. So it's one of those four. The fourth one being continuation or reversal. So AMDX or XAMD. Anyway, point is, he got this crazy entry here, and I wanted to see if we could figure out what key level he used to enter. This was on, wait, this was not even today, but I do know what day this was. This was on, I don't know why he would post this today. No, he didn't. He posted this last week. Let's look at it real quick. I know this is not even today's recap, but I want to go look at it real quick. So, going over to, I know what day this was. It was last Tuesday. And I want to see what key level he's looking at, because I want to understand how these quarterly theory guys are entering. So let's go to maybe 8. So this was that day from last week where we had really nice, a really nice London reversal day where we had accumulation, manipulation above Asia's highs into this key level here. This was a hourly order block. I'm not going to go, well, I guess I'll just show it really quickly. Here we have the hourly order block. You can measure it either like this, or you can measure it like this, so you get the midpoint of that. Here's that hourly order block midpoint. This is the one I would use. So you can see we pushed right into that key level, and this key level marked the exact top, which is crazy. And I know I didn't draw it perfectly, but I'm pretty sure if you draw it perfectly, it lines up like really well. And so anyway, get a push into that, and as well, this aligned up perfectly with the stat map. So the daily manipulation level was right here. So I want to know, what was the reason that he entered this trade? Let's see if we can figure it out. He enters his sell limit at the very top here. Oh my gosh. What could possibly have made him enter that? Let's see. So my first thought is maybe there was an opening gap. Well, this opening gap got respected, but that's not the one we're looking for. What about new week opening gaps? No. Let's try and up the amount just in case we're missing any. Maybe like 35. Okay, it wasn't an opening gap. You can see that did get respected though. Let's see, was it a key time? No. Let's pull this up again. Let's try putting on event horizons. Oh, they're already on. Let's get rid of this. I don't want to waste too much of your guys' time, but I can't find it. If any of you guys know what key level he entered off of, I really want to know, because I want to know how people can get trades like this. If you guys know, shoot me a message, do some research, let me know what you guys find. And yeah, I think that about covers it for today. Sorry I went on such a tangent, but I really find this stuff interesting, and so I like learning, and I like learning about this stuff. I will see you guys in the next one. Bye.